The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Squawk Box with Karen Cho and myself, Steve Sedgwick, and these are your headlines. President Donald Trump pledging to move forward with sweeping tariffs on Canada and Mexico next week, with the JPMorgan Chase CEO Jaimie Dimon telling CNBC corporate America will largely retain its investment conviction.
It'll affect the confidence of certain businesses, but if I pulled 100 businesses out here today, 80 would tell you it's not going to affect my business at all.
The US 2- and 10-year Treasury yields falling to their lowest levels of the year ahead of Friday's PCE inflation report, with growing concerns over sticky inflation rattling markets.
German CDU leader Friedrich Merz mulls changes to the country's debt rules as he looks to form a centrist coalition government. A top union negotiator tells CNBC that parties must come together to protect jobs.
The Democratic Centre must now finally tackle the major issues and must also ensure reliability going forward so that employees have prospects and security is restored, because uncertainty is precisely what the populists capitalise on.
Tesla's new car registrations sink by more than half in Europe, despite an uptick for the broader electric vehicle sector in January, according to new data from the ACEA.
Very good morning to you all. Good morning, Karen. How are you?
Good morning. Very well, thank you.
Good. Yes, nice to see you too. Let's get straight into this top story and we'll have a good old chat, maybe even a ding-dong about it as well. Because the US President Donald Trump says tariffs on Canada and Mexico will go ahead on time and on schedule. Now, that's despite the country's efforts to mollify his threats ahead of next Tuesday's deadline. That means that barring any changes, almost $1 trillion worth of US imports from the two countries will become subject to levies. The president's comments come after he ordered officials to relaunch tariff investigations on countries that levy digital services taxes on US companies, which would put the EU and the UK in the firing line. JPMorgan CEO Jaimie Dimon gave his view on those tariff threats exclusively to CNBC, and I will bring you those comments because they're very interesting a little bit later on.
Meanwhile, shares of Japanese chip makers are under pressure following a report that the White House is also looking to impose tougher measures on China's chip industry, building on measures implemented under Joe Biden. That's according to Bloomberg, which says officials have met with their Dutch and Japanese counterparts about restricting ASML and Tokyo Electron engineers from performing maintenance on equipment in China. This in an effort to get allies to implement similar curbs. The EU is reportedly widening the list of US goods that will be subject to retaliatory tariffs after Trump announced a series of 25% levies on steel and aluminium that could come into effect as soon as the 12th of March. That's according to Bloomberg, which said on Monday that the European Commission estimates the move could mean a $28 billion hit to exports from the bloc.
So many things to talk to you about. We've had an incredible few days, and of course we had the German election result as well.
Yes.
Before I go into tariff conversations, is the desired effect of a lot of Donald Trump policies towards Europe, and I'll just pick up on that angle on it as well, is the desired effect to get Europeans to have less American defense, less American munitions, less American corporates, less big services from the big tech companies in the US? Because if it is the desired result, then I think he's getting what he wanted, because we saw Friedrich Merz yesterday. One of the first things he said yesterday was we want to achieve independence from the US. Now, there is no doubt about it. Europe has been pathetic in its own defense, certainly in the last few years, but it's actually grown its share of GDP quite dramatically since 2018, but it is still way below what it should be. absolutely, Europe needs to defend itself, or certainly make big overtures to that. But that aside, would that mean buying European defence equipment rather than Lockheed Martin? Does that mean exactly buying European digital services from European companies, which may well have more protection rather than the big American companies as well? So if that's what Donald Trump wants, absolutely, we should defend ourselves, but absolutely, Merz, who is the leader of the most powerful economy in Europe, is now saying his stated aim is independence from the US.
Or does Trump have such a low bar that he thinks the Europeans are not actually going to climb above it in terms of coming up with their own solutions on defence to technology? I mean, defence maybe, but technology, there's still a huge gap with those big US corporates. So if there are tough measures, does it just hit the Europeans, punish the Europeans, rather than coming up with their own solutions? So let's just see what happens. But when it comes to the tariffs, I think it's fascinating how the market has reacted, because we've rolled over now on some of the boards. If you look at the NASDAQ in particular, and you might say, well, look, it's the DeepSeek effect, but it hasn't been, because the US markets performed quite well during February, even with the DeepSeek news. So the market is now saying, is it stagflation that is seeping into the corners of this market, impacting psychology? And that is the tariff story that we are talking about. Growth maybe coming back from higher levels, but also inflation increasing again from here because of those US tariffs and the pressure that we're seeing on allies, and that's across from the northern southern border across to Europe. So I think that the market is now starting to react to that stagflation threat. And you've seen it in the 5-year break-even inflation rate, 2.61%. That was a 2-year high. The NASDAQ reaction, that seems to be a stagflation reaction. So I think the tariff story is seeping into the market psychology here. One counterfactual to that is whether Trump can manage to rescue some of the animal spirits by encouraging huge investments. We've seen it from Apple, investments into the United States, we've seen it from Anthropic, whether those investments, and there's a view in the market that you'll see a string of these sorts of announcements from corporates trying to curry favour with the US administration, whether that could counteract some of the negativity on tariffs.
Absolutely. But let's just go through two very basic bits of economics for the administration, which I'm sure they know because they're all stunningly smart. They're way smarter people and way richer people than I will ever be. But let's go through the economics. Tariffs are collected at the border from the people who are importing the product, yeah? That money will go into the US exchequer, into the US Treasury, which, you know, is hopefully a great font of financing for America as well. But that is paid for by higher prices, by the companies who are importing, by the consumer as well. That will create an inflationary impetus on those goods. We're all agreed, yeah? Yeah? Okay, good. And maybe they'll buy less goods, so there'll be less trade and less economic activity. That kind of follows a lot of the economic principles. Again, you lot know far better than I do. Now, here's another thing as well. If you employ an American worker versus a Mexican worker, I'm sure that American worker is equally as good. And for the sake of argument, let's say the American worker is better. Now, I don't necessarily know that. I'm just saying, you know, because it's going to cost you a lot more, by the way. Because that Mexican worker costs you somewhere in the region, and there's a lot of stats out there. You don't need my knowledge on this one. You can go and look it all up. I'll use the Global Living Wage Coalition for one as well, but there's loads of stuff out there. You just search it up as well. The average living wage for Mexicans goes from $690 a month to $1,075 a month. The figure in the United States, according to this one piece of data, is $3,900. Now that's great. Bring the jobs home, bring the manufacturing home, but you've got to remember it comes with a cost. I'll show you another bit of data. I've just looked up there's so much there, and I'm not cherry picking, I promise you, ladies and gentlemen. Mexican workers get on average wage in Mexico is $291 per month, compared with $1,870 per month in the United States. A Mexican worker apparently works a 48-hour week. A US worker works somewhere in the region of 40 hours. And I'm not saying that's good or bad. I'm not making a value judgment. Please don't think I'm doing that. I'm just telling you, if you bring those jobs back to the United States, it has a cost. And one more tiny little stat. Who do you think is employing those Mexican workers? Is it Mexican companies? In many ways, yes. But by and large, just go and do a little search of how many American companies are employing Mexican workers and then getting the profit differential and turning that into profits for Wall Street, which is turning into shareholder returns. These are facts, ladies and gentlemen. I'm not telling you something you don't already know.
To me, there was a very interesting narrative in the consumption numbers yesterday. This was put out there from Moody's Analytics, and they were saying for households with the top 10% of incomes making more than $250,000 a year, they now account for nearly half of all consumer spending in the United States. So the skew you're seeing here for the top income earners, that is really the highest since the data has been collected. That is telling you just how sensitive the consumption patterns are in the United States. And as we know, it's a consumption economy. So if you've only got a handful of people now spending money, making up for that consumption, it tells you if you drive up prices even further from here, it could ruin the consumption economy in the United States.
The good old Gini coefficient is alive and well, is what you're saying.
Yeah. Well, JPMorgan CEO Jaimie Dimon has weighed in on the outlook for the US economy, with Dimon telling CNBC he now sees the US consumer environment normalizing.
We've had this huge boom after COVID and all the money that was given out and spent. And so we see consumers are kind of back almost kind of normal. So they don't have all the extra money, but they have jobs, wages are going up. But if they substitute a cheaper product for a more expensive one, they cancel a trip. So you're starting to see what I put normal. Credit costs have normalized. So it's just almost back to what I call a normal environment.
What does that mean? Consumers almost normal. Okay, HSBC's corporate and institutional banking CEO Michael Roberts told this channel he expects the pace of rate cuts from the Fed to slow in the coming year.
I think the Fed is going to take a very cautionary approach. They don't feel they need to rush reduction in rates. I think Jay Powell was very explicit on that basis. And there is higher inflation in the United States. It's a bit stubborn. It's around 2.5, 2.6%. They would clearly like it to get it down to around the 2%, which is the target rate. It may be a lot longer. In fact, we're calling for a slowdown in rates, maybe 75 basis points total cut for this year. But that is clearly much less than we would have seen before.
I mentioned the wobble on markets, and you're feeling in particular in technology shares now. One of the undercurrents for the market pulling it lower by a sector handle, but also as you take a look at the major indices, the Nasdaq underperforming now other major markets. In session yesterday, down 1.2%. Tallied up for the year, and now 4.5% off its record high so far this year. For the S&P 500 dropping by 0.5%, 2.6% its record high, and we're about 3.5 off the records for the Dow, even with a slight faint amount of green yesterday. To Treasuries, and what we're seeing here on this board, the 2-year we're 4.15, the 5-year 4.21, and 10-year we're 4.37. So just coming off the levels in the morning session, so flipping lower. To what we're seeing on the dollar as a result. Slightly weaker yield to the dollar this morning. Euro sterling marching into the green, but 0.1% on both of those trades. Dollar slipping versus the Japanese yen, but holding firm versus the Swiss franc. To the oil trades and gold this morning. This is how we're setting up in WTI and Brent, both tracking a little bit firmer despite some of the geopolitics as we watch the implications of the war in Ukraine. 0.5% up on WTI. Spot gold prices are lower, so we're 2,937, coming back by about 0.5%. The Asia markets, the session for Tuesday, this is how it's playing out so far. Right across the board, on lockstep with some of that fade that you see in stateside. Japanese stocks down by more than 1.25%, giving back territory on Hong Kong and China, and in the mix too, the Kospi down. So it is red, the tone across on the Asia markets.
Yeah, this next story is so apt. In fact, it should perhaps have been with the previous conversation, because Apple apparently says it plans to invest $500 billion in the US over the next 4 years. With the CEO Tim Cook saying the iPhone maker is bullish on the future of American innovation. I'm bullish on the future of American innovation. I think we all are, aren't we? The tech giant plans to open a factory for AI servers in Texas as part of the proposals. Cook met with President Trump last week, whilst Apple, having previously come under pressure from the White House over where it manufactures its products and pay its taxes. So there you go. So Tim Cook is a canny political operator as well, it looks like. CNBC has confirmed AI startup Anthropic is in talks to raise $3.5 billion in a new funding round. The funding would roughly triple the company's valuation. Doesn't matter what's going on with DeepSeek, does it? The funding would roughly triple the company's valuation to $61.5 billion, according to sources. Anthropic was previously valued at $18 billion. Yeah, let's triple it. And has been backed by Amazon and Google. Anthropic declined to comment to this very channel.
Coming up on the show, President Macron visits the White House for discussions on Ukraine as the US blocks a European-backed resolution at the UN. We'll bring you the latest. Plus, CDU leader Friedrich Merz mulls changes to Germany's debt rules before the new Bundestag takes office. We'll have the details. And we will discuss earnings and the German industrial sector with Heidelberg Materials CEO Dominik von Achten. There's a first on CNBC Conversation coming up at 6:45 London time. French President Emmanuel Macron has met with his US counterpart President Donald Trump at the White House. The two leaders discussed the war in Ukraine, with Macron insisting that Europe has not shied away from its responsibilities in helping the country. Meanwhile, Trump said he was focused on achieving peace in Ukraine, quote, as quickly as possible. Speaking at a joint press conference, Trump said he and Macron agreed on a shared responsibility for preventing the war in Ukraine from spilling over.
Should have never started, but it did. And what a mess, what a horrible, bloody mess. I'm also pleased that President Macron agrees that the cost and burden of securing the peace must be borne by the nations of Europe, not alone by the United States. And Europe must take that central role in assuring long-term security of Ukraine, which they want to do. And that's not a very big step. The big step is what's going to happen over the next few weeks.
Meanwhile, the French president insisted peace could not come at a cost or a ceasefire without guarantees. He also reiterated that US support was key.
Nous voulons la paix, on est totalement d'accord.
We want peace swiftly, but we don't want an agreement that is weak. The fact that there are Europeans that are ready to engage, to provide for these security guarantees, and now there's a clear American message that the US, as an ally, is ready to provide that solidarity for that approach. That's a turning point, in my view, and that's one of the great areas of progress that we've made during this trip and during this discussion.
Well, Charlotte joins us with more. Charlotte, do you want to just comment on the relationship first? Because I think that's what a lot of people are watching, not just the progress on Ukraine.
You never pulled your punch. You mean the handshake. Because these two have got serious history of man-shaking each other into submission, haven't they? I mean, at the parade and the Champs-Elysees that time. So it's like proper. Let's give it some and then give it the eyeball, isn't it?
And that kind of diplomacy
continued. Macron was doing some bicep curls beforehand because Trump's a bigger guy.
Yeah, there was a lot of tapping on the shoulders and hand on the thigh at some point.
Psychologists,
what was
body psychologists would have a field day with those two.
Yeah. But what's important is that you're right. They have a long relationship. You know, Macron was already president during the first mandate of Donald Trump, and he has invited him during Bastille Day. He invited him for the reopening of Notre Dame. They have a relationship going, and so this meeting was very important because whether Macron can bring Donald Trump on board with what's happening in Ukraine at the moment. Of course, it was also the first European leader meeting the US president after the talks that we saw last week in Saudi Arabia between the US and Russia about a potential ceasefire agreement. So while you have a lot of leaders in Kyiv yesterday to mark the exact date of 3 years since the start of the war, this was a very important meeting of Macron meeting Trump there. So here again, a careful choreography with all these scenes in the Oval Office and in the press conference there. But one of the key elements that Emmanuel Macron was trying to get from Donald Trump was to pledge some military backup for European troops in Ukraine in case as part of a potential ceasefire agreement. That's what, in a sense, what President Macron said yesterday.
Une fois qu'il y a une paix solide, durable.
Today, when we talk about troops, we're talking about sending them in after we've negotiated a lasting peace. And once we have that solid lasting peace, that's part of an agreement signed by Ukraine, signed by Russia, and for which we will provide the guarantees, then at that point, and recently, France has worked with the UK to provide its contributions. We've worked on plans, we've worked with our militaries, not to go to the front lines, not to go into occupied territories, but as a show of support, to show that we have a negotiated peace signed by both sides. That's a peace we will preserve.
So on these questions of having a US backing of European troops potentially in Ukraine as part of a ceasefire agreement, President Trump said we will have a backing of some kind. Obviously, European countries are going to be involved. I don't think you're going to need much backing. So a bit of a cold and hot there from Donald Trump.
On the 3,000-kilometre border.
Well, exactly. But that's exactly what I was saying there. And one interesting thing that Donald Trump said yesterday is that one French journalist asked him whether he's spoken to President Putin about accepting European peacekeepers on Ukraine soil, which in public Russia has always rejected. President Trump yesterday said that he was on board with that idea, that President Putin was on board with the idea. That's something that, again, the Russians have never said in public, so we have to wait to see whether that is true or not, but that was something quite newsy. But here again, while they say that truth could be weeks away, you know, on the sideline you had the vote in the UN General Assembly there, where the US voted with Russia on a resolution around the war in Ukraine, talking that he was preparing an economic deal with Russia. When asked whether he was calling President Putin a dictator, he said, I don't use these words lightly, when he calls Zelensky a dictator. So, you know, there is a huge gap to bridge. So while this meeting looked friendly on the surface, whether there is some substantial result, we have to wait and see. And of course, Keir Starmer is meeting Trump today as well.
Just want to confirm, by the way, this is rhetorical. The US joined Russia, North Korea and Belarus voting against this resolution. So great long-term US allies, Belarus and North Korea.
So the optics here, if there is no resolution, there's no truce, where does that leave Ukraine? And there is a disconnect when it comes to the weapons. Tallying it up by numbers, some Western officials would say that Ukraine would run out of ammunition and the use of sophisticated weapons by summer. So it does put a lot of chips on some sort of deal being cut if the weapons or use of them is not going to be there in the very short term.
And I guess that's what the Europeans are trying to do is get some time. They're saying, look, we're doing a bit, we are spending more on defense, but we just need time to up that production, to up that spending. And again, when you look back at France, it's kind of tricky. We know we're talking about the budget in France for a long time. They're trying to save money, but certainly in defense, they're saying they will spend more. They find it above that 2% of GDP when it comes to defense spending. They say they will do more. The Europeans are ready to take their part in terms of Ukraine defense. So again, last year, European countries in Europe gave more support to Ukraine than the US. Now they're ready to do their part and do more, but that they need time in order to do that.
Thank you, Charlotte. Very nice. The UN Security Council has adopted a resolution drafted by the US that takes a neutral stance on the war in Ukraine. It mourns the loss of life and urges a swift end to the war with lasting peace. The 15-member council has faced a deadlock throughout the war as Russia, of course, holds veto power, being on the Security Council. The UK is set to join EU leaders in talks about establishing a new European defence funding scheme amid fears over declining US protection. UK Chancellor of the Exchequer, Rachel Reeves, will speak with her EU counterparts at the G20 meeting in Cape Town this week. It comes after US President Donald Trump demanded European NATO allies ramp up their defence spending to 5% of GDP or risk losing US protection. Well, look, everything's a bargaining chip. I have issues with many Trump policies, but I don't have issues with the fact that Donald Trump wants Europeans to spend more money. I've mentioned it for the last decade. I've mentioned it for long the last decade. Obviously, I was in Ukraine talking about it in 2014. But in 2018, this came very starkly into focus. And I do mention this because I think it's the most pivotal moment really in Trump-EU relations, where he lambasted Frau Merkel, he lambasted Jens Stoltenberg, and we did it live on air. It was a breakfast meeting in Brussels where he said, you've got to pay more, end of. And he's right. Now, 5% is a bargaining chip. No one's going to get to 5% in Europe as well. The US, by the way, doesn't get to 5% as well. But there is no doubt about it. Those laggards who are not even at 2% in Europe now, and you know what countries you are. You are Germany, give or take. You are Italy. You are Spain, who are using excuses about your budget and what have you. That doesn't wash anymore for the Americans, and it shouldn't wash for Europe as well. Europe needs to get to 2% fact, and then perhaps even try and get to 3 and a bit further. Some countries are doing it. The ones that really fear for their safety are the Poles and the Baltic nations.
The rules are being taken. People are taking a look at the rules now, I think, around how you spend money in Europe, and that's just going to be part of the conversation. To me, there's a lot of old and a lot of new in this conversation, the old part being defence and how that gets done. The new part is around rare earths, which I think is fascinating because the whole conversation with Ukraine has been, do we have some sort of deal around rare earths, which ensures there's effectively boots on the ground in a different way for the Americans, not the traditional sense, but some sort of commitment from the Americans if there's industry there to develop. For the Russians too, and I thought that was fascinating yesterday.
So the Ukrainians either lose their vast natural resources to the Russians, or they lose their vast natural resources to strong-arming Americans who think that they spent $500 billion but actually haven't spent $500 billion in supporting Ukraine.
Well,
I just want to work out which imperial nation is going to be taking all the resources of Ukraine.
It was fascinating that we've gone from trying to support Ukraine's recovery with some sort of industry to how the Americans recover funds from what they've spent on Ukraine. I thought that was fascinating. But I think that the broader concept is ensuring there's some sort of commerce on the ground for the Americans to stay involved in Ukraine. They don't simply just say farewell if there's some sort of resolution, but also for the Russians as well. I mean, how do you bring the Russians back into the fold after all the sanctions that have gone on? How do you ensure they are part of the global economy again? And I think you have to find something completely different. It's not going to be Russian energy, is it? It's going to be something else.
I don't know if it's not going to be Russian energy. I have to be honest as well.
From day one,
the second most powerful political force in Germany has said on this channel in the last 24 hours, of course we want Russian gas. It's the cheapest, it's the most available, and it's the nearest as well.
As the first port of call, to me it makes more sense to have other industries that you'd welcome first, and then the second wave would be lifting of sanctions off energy. It wouldn't be a first port of call.
The world wants apart from basic resources. Vast amounts of fertiliser, but there's rare earths everywhere.
Well, not tappable. I mean, where can we get them from?
I'll just reiterate, Ukraine, that's their resources, not Russian resources. So what resources have the Russians got that the Ukrainians can deliver, for instance?
Possibly better logistics at this stage for the Russians, better infrastructure.
Well, speak to the Chinese about that, because the Chinese have balked on the second major pipeline of Russian gas to China for many years now as well, and because they basically are trying to strong-arm the Russians as well. So everyone seems to be trying to strong-arm everyone on price.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.